Home to 15 million people, the city of Istanbul stretches over 2 continents, with its far corners connected by trains, trams, buses and boats. So people spend a lot of time commuting, and it's made them among the world's most active mobile phone users. They spend more than 400 minutes staring at their screens every month. This is one of the factors attracting cellular technology giants like Ericsson to invest in Turkey.
We have a young population, very eager to learn, very eager to contribute and innovate. Plus the universities, the quality of education in the universities and the willingness of people to do research.
Officials at the government-backed Scientific and Technological Research Council, TÜBİTAK, say they're introducing schemes to attract foreign companies. They want to develop high-technology products here to meet domestic demand and to sell to the world.
We have kicked off new industry PhDs supporting packages focusing on high technologies. Many foreign companies are already manufacturing their products in Turkey. We want them to also carry out research and development for new technologies and products here.
And Ericsson says these steps can put Turkey at the cutting edge of innovation.
We have seen this move of the government towards bringing the technology shift and technology transfer to Turkey. We want to, take that one level higher and create the, 5 years, 10 years down the road, the new technologies or what type of thinking that is required to create the next big thing from Turkey.
Last year, the Turkish lira fell to its lowest level ever against the US dollar. But the weaker currency attracted a record 40 million tourists and boosted investments in private property as well as business. Some experts say the currency is still undervalued by as much as 20%, and that should help boost further investment this year.
We are aiming to attract foreigners who are working at top universities and R&D centers around the world, and also bring back our people that we lost because of brain drain. We have launched unique programs to attract them.
The central bank expects the economy to expand by just 2.3% this year, and this slowdown is expected to deliver the biggest hit to the construction, manufacturing and retail sectors. But the government hopes new businesses in the technology sector can drive growth in 2019 and beyond. Mobin Nasir, TRT World, Istanbul.
And for more on this, I'm joined in the studio by economist Abdullah Karataş. Good to have you back on the program, and Happy New Year. So inflation in Turkey now sits at a little over 20%. Still quite high, but it is significantly lower than the record high of 25% that it reached in October. What was behind this 2 months of declines in inflation?
That's a very good observation, Oscar. Well, there were tax cuts by the government on a lot of consumer goods, and in addition to that, there was an active campaign to keep prices low on the side of producers. And we're also seeing, to some degree, the currency effect work its way into the economy. And net inflation came out much lower than the expectations.
Interesting. We know Turkey's central bank hiked interest rates last September to 24%, defying President Erdogan's calls to keep them lower. I'm wondering, given that inflation is easing in Turkey, what do you expect the central bank to do if this trend continues throughout this year?
Well, it definitely gives them a lot of room to lower interest rates, and bear in mind that it is an election year and there are local elections coming up in March. So I would imagine that there would also be, an expectation that they would take that into account. That being said, signaling to the market also will play a role.
And we're also dealing with the problem of quite a large debt among the private sector, which is denominated in mostly foreign currencies. Will that continue to be an issue in 2019?
Well, given that the currency, the FX, has stabilized somewhat compared to the sharp sell-off in August, following President Trump's tweet, I think this gives a lot more visibility to businesses to plan, to budget, and so that currency stabilization will have a positive effect on businesses.
And what's your view on foreign investment in Turkey over the coming year? Because we know, particularly during a couple of the shocks that we saw with the currency, the investor sentiment did take a hit late last year. Do you expect that to recover this year?
I think so. I think 2019 is when we see a bottom in the market. And the good thing is once you have a bottom, you have a recovery. And for any savvy investor or possibly a contrarian investor, when everyone is fleeing, that's typically a good time to buy. And so the advantage is that businesses, foreign investors, local investors could pick up businesses, very well-run businesses, factories, at a steep discount in dollar terms compared to, say, a year ago or 2 years ago.
Interesting. We saw in Mobin's package there a focus on the high-tech sector. What other sectors are the ones to watch in 2019?
I think tech is definitely a very promising sector. In addition to tech, manufacturing, given that wages are significantly lower compared to a lot of Western European countries, we may even see a shift of some manufacturing from Western Europe to Turkey.
Okay, we'll see how 2019 unfolds for the Turkish economy. Abdullah Karataş, thank you as always.
Thank you.